Greetings to all the passionate investors and financial enthusiasts out there. This is your trusted guide, Iggy, from the renowned The Investing Iguana YouTube channel. Today, we're about to embark on an exciting journey into the world of stocks, specifically focusing on a company that you might not have come across yet, PTT Exploration and AMP Production, fondly known as PTTEP. Hailing from the vibrant country of Thailand, PTTEP is a blue-chip company that has been creating quite a stir in the Singapore stock market. What's the buzz about? Well, it's the impressive dividend yield of over 6% that this company offers. Yes, you heard it right. A yield that's hard to ignore in today's volatile market scenario. In the forthcoming video, we're going to delve deeper into why PTTEP stands out as a compelling investment opportunity. We'll dissect its robust earnings report, take a closer look at the impact of the rising oil prices on its profitability, and analyze the expected volume growth that could potentially boost its market position. So, why should you stick around? Because by the end of this video, you'll have a comprehensive understanding of why PTTEP could be the hidden gem you've been looking to add to your investment portfolio. If you're on the lookout for dividend-paying stocks in Singapore, your search might just end with PTTEP. This company is not just a gem, but a shining star in the realm of natural gas and crude oil production in Southeast Asia. With a significant presence in the region, PTTEP has strategically positioned about 70% of its assets in Thailand and its neighboring regions, thereby leveraging the rich natural resources of these areas. In the year 2023, PTTEP made a move that caught the attention of investors worldwide. It increased its dividend per share to THB 9.50, up from THB 9.25 in the previous year. This might seem like a small increment, but when you consider the share price as of March 22, 2024, this increase translates to a substantial dividend yield of 6.3%. This yield is a testament to the company's strong financial health and its commitment to rewarding its shareholders. But the dividend yield is just one aspect of PTTEP's appeal. There are 5 key reasons that make PTTEP a likable investment. These reasons encompass various facets of the company's operations, financial performance, and strategic initiatives. They provide a comprehensive view of why PTTEP stands out in the competitive energy sector and why it could be a valuable addition to your investment portfolio. So, let's delve deeper into these reasons and uncover the potential that PTTEP holds for its investors. Stay tuned as we unravel the story of PTTEP's success and its promising future. Number 1. Strong 4Q23 earnings. PTTEP's financial performance in the fourth quarter of 2023 was nothing short of impressive. The company reported a robust core net profit, which, after excluding one-time items, stood at a substantial $603 million. This figure marked a significant increase of 12% from the previous quarter, underscoring the company's strong financial health and operational efficiency. This remarkable growth in profit didn't happen by chance. It was the result of a strategic increase in sales volume and a diligent reduction in unit costs. Specifically, PTTEP managed to boost its sales volume by 2%, a move that directly contributed to its bottom line. At the same time, the company achieved a 1% reduction in unit costs, further enhancing its profitability. But PTTEP isn't resting on its laurels. The company is already looking ahead and planning for the future. In the second quarter of 2024, PTTEP expects its sales volume to rise by almost 8%. This anticipated growth is largely driven by the ramp-up of the G1 project, a strategic initiative that is expected to significantly boost the company's production capacity. Number 2. Rising oil prices. In the dynamic world of energy markets, rising oil prices can often be a game-changer, and PTTEP is well-positioned to capitalize on this trend. The company's financial performance is intrinsically linked to global oil prices, as the selling price of its liquid products, which constitute a significant portion of its revenue, is tied to these prices. Take, for instance, the recent surge in Dubai crude oil prices. In December 2023, the price per barrel was $77. Fast forward to the present day, and the price has climbed to $82 per barrel. This uptick in oil prices directly translates into higher revenues for PTTEP, given its substantial portfolio of liquid products. Speaking of PTTEP's revenue sources, it's worth noting that the company has a balanced revenue stream. About half of its revenue is derived from liquid products, while the other half comes from natural gas. This diversified revenue base not only provides a steady stream of income but also cushions the company against fluctuations in individual energy markets. As for domestic gas prices, they are expected to remain stable at around $5.70 per metric million British thermal unit, MMBTU. This stability in gas prices, coupled with the rising oil prices, paints a promising picture for PTTEP's future financial performance. In conclusion, PTTEP's strategic positioning in the energy market, its diversified revenue base, and the current trends in oil and gas prices all point towards a bright future for the company. For investors seeking a resilient and growth-oriented energy company, PTTEP certainly fits the bill. Number 3. Expected volume growth. PTTEP, a significant player in the energy sector, is making strategic moves to increase its production capacity. One of their key initiatives is the G1 project located in the Gulf of Thailand. This project holds immense importance for PTTEP and the region as a whole. The reason being, it is set to replace the current need for imported liquefied natural gas, LNG. LNG, being an imported commodity, comes with a higher price tag, which impacts the overall cost of energy production. The G1 project, by ramping up production, will provide a more cost-effective solution, thereby reducing reliance on expensive imported LNG. This shift is not just strategic, but also economical, paving the way for more sustainable and affordable energy production. Looking at the future, PTTEP has set ambitious targets for itself. The company expects a significant increase in its sales volume for the year 2024. The projected growth rate is 9%, which translates to an increase from 169 million barrels of oil equivalent (BO) in 2023 to 185 BO in 2024. This growth in sales volume is a direct result of the increased production capacity brought about by projects like G1. Number 4. Low risk of government intervention. PTTEP operates in an industry where oil prices are largely influenced by global market dynamics. These prices are not determined locally but are a result of various factors at play in the international market. This includes aspects like global demand and supply, geopolitical situations, and decisions of major oil-producing countries. In the context of Thailand, where PTTEP is based, the government has historically not intervened in the domestic exploration and production (E&AP wink with tongue sticking out) business. This hands-off approach by the government can be attributed to the fact that the domestic oil supply only fulfills a small fraction of the country's total demand, a mere 12%. The majority of the oil demand in Thailand is met through imports. Given this scenario, any intervention by the Thai government in the E&AP wink with tongue sticking out business would not have a significant impact on the oil prices. Since the prices are largely determined by imports, they are more influenced by international market dynamics than local government policies. This situation presents a low risk of government intervention for PTTEP. The company can continue its operations with the assurance that its pricing is unlikely to be affected by sudden policy changes. This stability allows PTTEP to plan its strategies and make investment decisions with a higher degree of certainty. Number 5. Strong cash flow and high dividend payment. In 2023, PTTEP generated $4.4 billion in cash flow from operations and spent $2.4 billion on capital expenditures. These expenditures are crucial for the company's growth and expansion, as they are typically invested in long-term assets that will generate future income. Despite these substantial capital expenditures, PTTEP continued to prioritize its shareholders by paying out $1.1 billion in dividends. This is in line with the company's history of paying around 50% of its profit as dividends, a practice that underscores its commitment to sharing its success with its shareholders. Even after these significant outflows, PTTEP was able to accumulate more cash on its balance sheet. By the end of 2023, the company had a net cash position of $0.5 billion. This strong cash position provides the company with financial stability and the flexibility to seize new investment opportunities. One such opportunity is the Seagreen offshore wind farm in Scotland, in which PTTEP announced a $690 million investment. This investment reflects the company's commitment to renewable energy and its strategy of diversifying its energy portfolio. Importantly, this investment will be funded by the cash on hand and will not impact PTTEP's ability to pay dividends. This ensures that the company can continue to reward its shareholders while also investing in future growth opportunities. What are the risks? Like any business, PTTEP faces certain risks that could potentially impact its operations and profitability. One of the primary risks is associated with the G1 project. This project is crucial for PTTEP's volume growth in 2024. However, any potential delay in ramping up this project could adversely affect the company's planned growth trajectory. Delays could be due to a variety of reasons, including unforeseen technical challenges, regulatory hurdles, or even natural disasters. Such delays could not only impact the project timeline but also increase the overall project cost. Another risk factor for PTTEP is the volatility of oil prices. While gas prices in Thailand have remained relatively stable, oil prices are subject to fluctuations due to a variety of global factors. These include geopolitical tensions, changes in production levels by major oil-producing countries, and global economic conditions. The International Energy Agency, IEA, has forecasted that oil production will exceed demand growth in 2024. If this prediction holds true, it could lead to a drop in oil prices, which could in turn affect PTTEP's profitability. Currency fluctuations also pose a risk to PTTEP. The company's dividend yield for holders of the Singapore Depository Receipt could be affected by fluctuations in the exchange rate between the Thai baht and the Singapore dollar. Exchange rates can be influenced by a range of factors, including interest rates, inflation, political stability, and economic performance. Any significant fluctuation could impact the value of dividends when converted from one currency to another. PTTEP offers a compelling investment opportunity with its strong earnings, rising oil prices, expected volume growth, low risk of government intervention, and robust cash flow. However, investors should be mindful of the potential risks, including project delays and oil price volatility. If you're looking for a high-yield dividend stock in the Singapore market, PTTEP is worth considering. That's all for today, folks. If you found this analysis helpful, don't forget to like, subscribe, and hit the bell icon for more insightful investing tips. This is Iggy, signing off. Stay savvy, investors.